Hello and welcome to Growth and Value Stocks. My name is James Boyd. Alongside me, normally is Connie Hill, but we have Michael Fairborn in the chat, a good friend of mine. So he knows something about growth and value, don't you, Mike? Say hello to Mike. You guys know Mike. He teaches the Think Script class and also swing trading throughout the week. Say hello. Also, texting hello, let's see hello, Tech One Trades, GT, Lisa, Ray, and many others. Jay Richardson, hello to you. Will, Grace, JP, hello. Let's go ahead and get started. Now, just real quick as we get started, remember we do post educational content on X. If you go to our X page, it's our first name, last name, and CS for Charles Schwab. Now, some of the things that I've been posting in the last couple of days are extremely interesting. The post yesterday regarding the sector performance compared to the S&P, if you did not see that, that is really some interesting kind of review. I think it was from since 2000. Take a look at that. Very interesting to see some data like that. Again, it's not a forward-looking instrument or guarantee, but it's interesting to take a look because it kind of goes in hand with what we've talked about. Now, remember with what we discussed, remember that our examples here today, the information is provided for general informational purposes only. Also, when we discuss examples, we will show those on the paper money software version. You might be using schwab.com or the web-based version, etc. That's fine. We're just going to be showing using the Thinkorswim paper money platform, and we're going to use that for educational purposes. Remember that Schwab does not recommend the use of technical analysis as a sole means of research. It's a starting point, it's not the end. Fundamentals, intermarket analysis, macro, very interesting to look to complement the technical analysis. Now, when we talk about also examples, we'll look at some growth value. I don't plan to talk about income as much, so our examples are going to be a little bit more focused on growth and value. Now, we'll take a quick look at the market, sectors, and the industry groups, but then we're going to dive right into some Dow stocks. This class probably could have been taught just by looking at Dow stocks. When I say Dow stocks, I'm talking about the Dow 30 stocks. Now, when we talk about growth, value, and income, this really gives you an idea of what is it that we're really looking at. And by the way, people are at different areas of their life or different spots, and they might have a different focus. As an investor, even if you said, look, I'm 40, 45, 35, whatever, you might not always be looking at growth. There's different reasons why an investor would look at value and income. It actually makes sense to kind of learn all of them, okay? And how that might complement maybe someone's portfolio. And there's sometimes different times in the market where one category might make sense. Usually with growth, we're talking about things if volatility is high and falling down, growth tends to be a focus. If we're talking about, let's say, income, that's usually when the volatility VIX is low and starting to increase. So with that said, let's go ahead and get started. So first off, if we look at the Dow Jones, let's start here, okay? Now, if we look at the Dow Jones itself, I'm talking about the index, and if we pull this up, I want to kind of just show you this, and if you don't mind, let me actually just pull up this chart, and I believe this chart, yeah, I want to pull this up, okay? Now, this chart right here has the NASDAQ, okay, and actually I had the NASDAQ, let me put on the Dow, and on the bottom, you're going to see the relative strength, okay? Now, this is going to be the tale of two tapes here, so make sure we're paying attention. So here, the chart, we're looking at the Dow Jones. The red line at the bottom is the S&P. Now, the green line is the performance of the Dow Jones relative to the benchmark. The benchmark being the S&P 500, and you're going to notice that that benchmark is a flat line. You're going to see that over the last, let's say, 2 months or so, the Dow has been underperforming. In other words, falling away from the red line, which is the benchmark. Now, could that change? Now, in the last couple of months, that's not been the case, okay? Now, let me kind of show you the tale of two tapes here. If we look at the NASDAQ, and we said, how's the NASDAQ performing, which hit a brand new high. Now, Lisa, in the chat before, say hello, Lisa. By the way, she is another redhead, and we'll just leave it at that. And if you look at the red line, the benchmark, the S&P 500, the Green line is the performance of the NASDAQ relative to the benchmark, and that NASDAQ line has been increasing. So tail of two tapes here. So someone said, hey, what might be some of those areas? Some investors like to look for relative strength. When we talk about the NASDAQ, we're talking about areas of growth, 50% being technology. Now, if we kind of look at this just real quick, now, by the way, that was a brand new high. When we say the NASDAQ here, we'll bring up the SOX. That was also a brand new high. And what do you also notice about relative strength? Relative strength is pretty much at the top of the chart. And that actually has been getting further and further away from the benchmark line. What about, let's say, now if we went the SPX to the SPX, you're going to notice there's only a green line. Where did it go? Well, it's relative to itself, okay? That S&P, though, has been very stingy so far in giving anything back, okay? This is kind of like we're on a bus, and the bus goes to the stop. The bus opens up the doors, and we're actually looking to see how many people get out. So far, if we said people getting out being red candles, there's only been 2 people that stepped out of the door, and then all of a sudden, so far, we are actually seeing a green candle. Now remember, the less people that get off the bus, the shorter that door is open, the greater the chance of this might be a continuation pattern. Now, we kind of talked about that last week. Okay, so that's not new. Russell, just now, let me bring up the SPX EW. The SPX EW is that equal weighted S&P 500. And if you look at that, we are kind of still in that pattern of the cup. Now remember, it's not unusual to maybe get a 3, 5, 7 day pullback to make the handle, okay? So, someone might look at this and say, I'm seeing signs of weakness. You actually kind of want some weakness to make a higher low. Now, if we pull this chart up, if we go to this chart right here, and I'll share these charts with you. If we go to this chart, you're going to see that if the price is above the moving averages, both of them, and we're not in an area of resistance, at least kind of hitting it yet, you're going to see that we're still getting green candles. Now, the longer that we stay here, the greater the chance of this now becomes maybe an area of resistance. So what are we expecting? We're kind of expecting this green candle to become an orange one, signifying that we're at a point of resistance. If we pull back a little bit to 84, 81, 81.44, consolidate, wouldn't be surprising. Just want to stay above 81.44. 81.44 is where the 10-day exponential moving average is. It's where the old consolidation area is. So seeing some type of flag pullback doesn't necessarily mean a bearish market here, okay? Now, are there any questions real quick before we look at some examples? Now, the things that I just want to kind of make mention of just briefly, okay? And I'm going to watch and see if there's any questions. You still have to keep an eye on the industrials. The industrials, when we say industrials, we're saying transports, okay? So when we actually look at, let's say, the transports, keep an eye on those. We talked about Caterpillar yesterday, among others. When we also look at that area, we might also want to keep an eye on, let's say, basic materials. Now, basic materials doesn't have a tendency to move the S&P 500. Check the post from yesterday on sector performance and how it relates to the S&P. If we also look at, let's say, the financials, IXM, you take a look at that. We need it to actually hold the 641. Pretty much most of these things are kind of sitting in these consolidation areas. The sector there, discretionaries, the dollar sign IXC for communication. And you're going to kind of all see that they're kind of all in a 2 to 3 day flag pullback. The key word is so far. If we said industry groups, we would have to kind of reiterate software, cybersecurity, and steel. Those would be probably 3 industry groups we'd probably keep an eye on. Okay, steel has been really the one that's probably been under talked about, but a couple of those names in there like STLD, NUE, and so on, they've blown up. Okay, now people, historically used to talk about steel quite a bit, but lately you hardly hear anyone even mentioning it, which is kind of interesting. Okay, now what I want to do is let me just see real quick. Hello, Debbie. How are you? The comment from Mike, is GE getting hammered, but opposite? Yeah. So let's kind of pull this up just real quick. Now, I got a number of stocks that have earnings this week, but probably 40% of the S&P 500 coming next week. Tale of two tapes here. GE getting pushed down, but its twin cousin, the GEV, okay, seeing the opposite. Okay, now we don't have any positions in either, so it doesn't really relate to kind of what we've done or talked about. But GE, yes, getting pressed down. Now, by the way, that actually, John, no, I haven't. I didn't block anybody. Okay, just real quick. Yeah, okay. Now the comment from was MBH. Do you ever look at an intraday chart? Yes, I do. Yes. Okay, now I want to kind of talk about some Dow stocks. Now, when we look at those Dow stocks, let's go on the left-hand side. Let's kind of push this down right here on the left-hand side. And I want to kind of talk about some of the things we're seeing in the Dow. Remember I said before, we could just make this class probably just on Dow stocks. There's some interesting potential setups in the Dow. What do you mean? Well, one of the stocks that we've been watching, we talked about CRM yesterday. Can it continue to get a reversal? I don't have any new comments on that. We talked about Amazon, and I posted a video on that yesterday about how it's in the upper band of the moving average envelope, not really retreating. Could that be a potential breakout on a 3-year weekly chart? Don't have anything new to bring up there. I think the one that we probably need to kind of keep an eye on to see, can we get a longer term, and I'm going to show this, okay? When you look at NVIDIA and you pull this up in terms of looking at its relative strength, it doesn't look like it's done anything. But when you look at its performance compared to the S&P 500, it has, on a relative strength basis, done better. Now, if I clear that drawing set, and if I change this to, let's say, maybe let's do show price as a percentage, it's up more than you think it is. And I'm bringing this up because there was a question on this, okay? So on the right-hand side, that sideways S, we can go down to where it says show price as a percentage, okay? Now, sometimes when you look at the charts, it doesn't seem like it. But when you look at the percentage, it's like, oh, wow, maybe it's more than I thought. I'll show this. I'm looking at NVIDIA, and I'm looking at NVIDIA compared to, let's say, the S&P. Again, red line, benchmark, green line, the performance of the NVIDIA compared to the S&P. You could also see the percentages over time. So if I'm looking at a 1-year daily chart, we start out at 0, okay? And that right there, that one was 20%, 40%, 60%, 80%. Now, there's a question asked and said, hey, when you look at the relative strength, how is it possible that the NVIDIA, which hasn't done anything on the chart recently, how come it's still showing pretty high? Because it's still done better than really the S&P, okay? Now, if we brought up the S&P, which, by the way, that's 103%, when we pull up the SPX and we look at the difference, okay? Well, where did we start out last year? At 0%. If you look at where this is right here, 36, okay? So still NVIDIA's ahead, okay? I wanted to bring that up because I said I would answer that question. I just kind of show you that. Now, yeah, we can hit that in just a sec on the dollar front. Now, let's kind of talk about, just real quick, 2 other stocks that I want to bring up. Well, 3 other ones, okay? Number 1 is, let's go back to Apple for just a sec. Now, we got Tim Cook, okay, stepping down. You got the hardware specialist guy who actually, when they do kind of new product releases, he was the hardware specialist, kind of giving the promo of that. And you're seeing that actually Apple, which has, well, investors have been desperately saying, when are you going to get into the AI realm? Okay. Maybe trying to get above the 260. I'm going to come back to that for just a second, but let's hold that spot. So let's do a control space bar. What I do want to look at first off is Boeing, and the second one we'll talk about is UNH. Now, sometimes as an investor, we're looking for companies that A, have a chart that's technically maybe holding support and obviously increasing, but maybe some fundamentals that have been roughed up, maybe negative earnings per share, and maybe where that story or the numbers are starting to turn. Now, we know that historically, when you look at Boeing, it has not been really that great. Okay. So when you look at this, if we go back to the last 4 quarters, 49 cents negative, negative 24 cents, negative 7.47, 9.92, and then actually negative 20 cents. If we actually went back further, you could actually see it's still been negative. Now, sometimes what investors want to see is with the new CEO in place, contracts being signed, etc., can the business start to turn itself? Well, if I go back to a 3 year weekly, we can also go back, and obviously, COVID was not helpful either. Negative, 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 more negative, more negative. If you could just start to get these numbers to start to go just less negative, slightly positive, and so on. Now, this should be a real story of just like in a business, you can't typically get the balance sheet to turn overnight. You're going to have to get a couple quarters underneath your belt, 4 to 6 quarters, to start to see that, hey, the strategy that the company is actually doing, it's working and it's changing the income statement. Very important, okay? Now, you change the income statement, you start to potentially change the stock price movement, okay? And then you start to get analysts where they start to forecast, hey, maybe could that stock be starting to go back up? Now, I'm not going to take my time to kind of talk about the forecast. Feel free to go to schwab.com. You could actually see the forecast out in time. And that's a key word, forecast. It's not actual. Now, if we take a look at this, this has gone past the earnings. The earnings was this morning. The estimate was 94 cents. The actual, negative 20 cents. Now, if we said, where do we see the support level? We might say something like 220. Well, if we said overhead, what do we got? We might say things like 240, 250, in that ballpark. Now, if we take a look at this, okay, I'm going to kind of mark this area, let's say 219-ish. This next level, let's say 240-ish. Next level above that, 245. Next level above that, we really got about 252. Okay? Now, the comment was, could you talk about the US dollar? Well, remember, when you're selling airplanes, these sales are most likely in US dollars. So if, for example, the US dollar was going down, but the British pounds were going up, well, the Brits don't have to pay as much for the plane, okay, potentially. You also have Europeans not have to pay as much for the plane and so on. Japan, not so much. And Swiss francs and so on. Canadian dollars, Aussie dollars, Kiwis, so on. So they're buying these planes in US dollars. Now, you could go check their income statement and you'd see that. But if you take a look at this, you're going to now notice that some people might say, hey, the fundamental, some of that negativity, the negative earnings per share, that could be turning. The CEO kind of taking some of the dysfunction out of their sales, their ability to deliver the planes and so on. Technical issues, remember those? We won't even get into those. We're going to, in example number one, what we're going to do is we're going to right click on the chart. And what I'm going to do is let's go to the paper money account. Let's bring up that Boeing. Okay. And if we take a look at this, I'm going to right click on that chart. And now what I'm going to do is go buy custom with OCO bracket. Now, when I do this buy custom with OCO bracket, where we right clicked on the chart, now how do we get the percent off? I'm going to go back to this, say, do not show price as a percentage, show price as a dollar amount. Well, if I click on that, there you go. Now, what I'm going to do is I'm going to put that overhead target. We said A, first level, maybe 245, secondary level, 246, third area right around 250. I'm going to put about 245. I'm going to go limit date GTC. So A, when we do a buy limit, we're saying we're trying to buy at this price or less. If we're trying to sell, we're trying to say this price or higher. That should make sense because we bought stuff. We want to buy cheaper. When we sell something, we want to sell something higher. Should make sense. Now the stop, we're saying, look, if we get down below that 219, and I'll go to the estimates in just a second, 219 less 2 to 3%, going to have a stop at 214.62. Now, if I set that stop at 214.62, what is that saying? Sell the stock if we go to that price or less. Now, let's imagine we said, hey, we're going to take a dollar amount, and we're going to say, example given, that we're going to invest $4,000. Now, if we look at this, this is going to show you a fractional amount, meaning it's not 17 shares or 18 shares. It's buying fractional shares, which some of you are interested in. And now what you're going to notice is, let's say we buy 17.7 shares, okay? Now, if we actually set a target, we're saying sell at that price or higher. Sell if we go to this price or lower, but it could be filled at a lower price. That is the con of the stop. Now, what I do want to do is let's go back to this for just a moment. And let me just log in just real quick. Some of you might, now this is very important, okay? So I'm going to log in and I just want to take a look at something just real quick. And what I want to do is I just want to pull up, where are those? Okay. Where do you see the forecast? Now you got to remember, investors invest for what it's done in the past, yes, to some degree, but what is it doing lately or now? But the really thing is going forward is, what is it forecasted to do? And how does that relate to other competitors? Who are the other competitors? Airbus, among others. Now, if we went down to this, you got to understand something, that the past historical fundamentals we already showed have not been that great. Now, first off, do they pay any dividends? They don't. When we come down to the earnings, now these earnings, if we look at these historical earnings, I showed you this, they have been just anything but spectacular, okay? Now, if you take a look at this, we can now see the upcoming earnings. Now, I'm going to show you a couple stocks here in just a sec where we could see the same picture. Negative, less negative, actually positive, turning positive. Now, a lot of companies, some don't give a forecast. Some don't even get analysts to actually give a forecast at all, let alone a year. Some might go out 3 years. Past 3 years, tough, okay? Now, that's where we could actually find that. So in our first trade example, we're going to do Boeing, okay? Let's send this, confirm and send. There we go right there. This will be in the margin account. Now, if we take a look at this, if we go back to, let's say, send, okay, there it is. Now, what I want to do is let's go back to that secondary example. The other stock that was in the Dow that has also not been great. And which one is that? Well, it's yours truly, United Healthcare. We could actually say with pretty good certainty that United Healthcare has been anything but an uptrend. When you go back and look at the history, and I'll go back to that schwab.com, we pull this back up. Let's go back and just type in UNH. We pull up UNH. We're going to go right back to where we actually saw. Now, the difference between Boeing and actually UNH is, A, they pay a dividend. The dividend has not been growing because that earnings per share has not been growing. Always remember, those dividends are not infinite, okay? They can change, but it usually is tied to the company's earnings, usually. Now, when we go back and look at historical, they went down, they went down, they went down, and the last one, and why we're bringing it up, a big change. Now, this is the second example we've seen where the balance sheet of the business, man, it struggled. The income statement struggled, okay? They were printing negative, diminishing earnings per share or negative, and now we're kind of starting to see maybe are some of these businesses starting to get a little bit of a turn. Now, don't worry, these are not all examples. But I want us to kind of keep an eye on these. The third example, if I had time, I'd probably look at Oracle, okay? That's another one. Now, if I brought this up and said UNH, what type of pattern does this look like on the chart? I mean, what do you see? Now, some of you might say, yes, show me that 3-year weekly chart. Let's pull it up. 3-year weekly chart, here it is. On that 3-year weekly chart, this is what it looks like. Kind of looks like what it did like on the daily chart because it consolidated for so long. Now, the first thing what you got to at least kind of say is, how come when we went up to the upside, we went from this 256 up to 310, we didn't even really pull back hardly at all? What does that tell us? It's the same thing I've been saying all the time. No, James, calm down. Which is, if you go up, but you don't give anything hardly back, the path of least resistance is potentially higher. Now, if we take a look at this, draw that Fibonacci. Now, if we draw this Fibonacci and we look at this from where it went low to high, We didn't even pull back to the 23% retracement. What's the takeaway? The chances of this going higher is probably higher than average. If we actually go back to the chart and say, well, geez, we had a little consolidation there, and then we've gone up to here. What do we see again? We don't even get it to pull back to the 23% retracement. Now, there's some investors that say, I'm waiting for a pullback. I'm waiting for a pullback. And they just keep waiting. Okay? Now, could it eventually pull back? Yeah, keyword is eventually. Now, what I've said, and I'll say it again, is that what I see in this market, and tell me if you see the same, and I think people overlook this, okay? Now, I have been called some names, such as James Body to Body Boyd, okay, fair. James Channel Boyd, okay, fair. And if you look at this, the one thing we see in the market is there's channels that are not narrow channels. They're monster channels where you could drive a dump truck through them. Now, why is that of interest? Now, we know with a channel, if you can break out of the top of the channel, the path of least resistance could be higher. The channel width becomes a measuring technique to say, could it go to that measurement over or target over time? Okay? Now, a bear, if they're smart, they would say, geez, these are cup and handle type patterns. These are usually not bearish patterns. And I might not want to short or maybe do a derivative thinking that the price is going to drop. Number one is I got price going up. Number two, I got fundamentals improving. Number three, I could have institutions reloading, so to say, into that space in, let's say, a stock like BA or stock like UNH that have maybe been underinvested in or under-focused in, okay? Now, what I'm going to do is I'm going to go back to this, okay? Now, if I go back to the 3-year weekly chart, and I was looking at that intraday chart because you asked me to, okay? If I look at the 3-year weekly chart, okay? Should have probably described that better, but someone's asking looking intraday. The 3-year weekly chart, that resistance is not any different than what we saw before, 355. The overhead resistance, 345. Now, this is not James and the Magic Show. It could be. But if we said the width from Seaport to Resistance is right around $87. $87 add on top, taking the same dollar value, $87 is going to get us to right there. Speaking of the Magic Show, that $87 gets us right here, right down to that touch there, touch there, touch there, here, and here. Now, kind of seems like magic, doesn't it? But so now, are we saying it's going to go up to that? I'm not saying anything, okay? Some might set a target at that area. Some are looking for the price to go up. Some are going to look for the volume maybe to be 80% of the average, maybe maybe average or above average. Some even look for maybe another type of product to see if there's a little speculation on what that stock might do, because not everyone does stocks. I mean, that's just the truth. Now, what we're going to do in this example is we're going to buy those shares. Oh, no, you're buying right at the high. Yeah, exactly. Now, if you went back and looked at my X page, there was a past study since 1990. A, if you bought at the highs, or B, if you just bought on any other day. And what was interesting since 1990 in that study was, you go back and read it. Now you're such a teaser. Go back and look for it. I'll repost it. But that was a stunning study, okay? Buy custom with OCO bracket. Now, when we do an OCO bracket, we're really saying, look, and I got to take this back to this right here. Let me bring it up right in the paper money account so we could track that over time. We're going to right click on the chart, buy custom with OCO bracket. Now, when we pull this back up, where was that target again? I got about let's go 440, okay? 440 right there, 440, okay? Now, as far as underneath, well, the A, where's the moving average? 337, okay? Not going to take that, now, second, if we said a tight stop, might take 345. But what we're going to do is we're going to take that stop underneath the moving average. Now, hold on a second. Everyone calm down about Oracle. We'll look at that in just a second, okay? Everyone calm down. Okay, 334, less 2%. And now what we see is 327.32. Okay? 327.32. Now, if we take 327.32, 327.32. Now remember, that's saying sell it if it goes to that price or less. GTC, GTC, and then we go back to the click. Now remember, all we're doing is we're clicking on the icon. I call those the pool balls or balls. Click on the percentage of the portfolio, dollar amount of the portfolio. We open this up. We're going to actually push in. We're going to go to 4,000. That's the example. It's going to be a fractional amount, 11.2215. 4 decimals is the cap there on fractional shares. And now there we go. We're going to look and see if this can't start improving. Now, if we go back to this, there's the order. It's in a paper money account. We're going to look and see if we can't get this to reverse. Okay? Now, what I want to do is let me kind of just make mention of a couple stocks, just real quick, before we go to Oracle. Okay? And I promise. Now, if I look at a couple stocks, now the one thing that was interesting in that post that I made yesterday was the relationship between technology. So there was a study kind of talking about if the market goes up, statistically, the sector that has had the highest impact of the market going up was number 1, technology. And the number 2 sector was, type it in the chat, financials. Okay. Now, we're not doing a paper trade on this, but it's going to be something we watch. Number 1, we're going to watch Goldman Sachs. That's kind of showing the V pattern. Keep an eye on that. If we're also kind of a continuance of what we talked about with the MACD, can the MACD stay above 0? Can it hold the momentum? Okay. That's going to be something we watch. IBM, kind of going back in that tech theme, this kind of looks like it's gotten above its diagonal resistance breakout, has earnings. Keep an eye on IBM. I'm not going to do a paper trade on that. It's not the focus right now, but that is kind of showing a little flag breakout earnings after the market. Okay. Now, Cisco is the one that we paper traded. It's gone to a brand new high. Remember, when you talk about bull flag pulls, on average, the pulls tend to be 5 to 7 days. All those days do not have to be green candles, excuse me. Out of those 5-7 trading days, 1 or 2 of those might be red candles. Keep an eye on Cisco. Now, the other one we're going to kind of keep an eye on is MSTR. Now, historically, we kind of talked about MSTR in relationship to that new asset class. Remember what that new asset class we talked about? I can't bring it up. Okay. But if you look at that, that one might actually be trying to reverse. This is a volatile stock, but also has another type of volatility as well. So when we talk about volatility in stock, we're talking about beta, price movement, etc. If we're talking about something else, you know what we're looking at. You know, that's something that has some movement there, forecasted movement. Adobe, ADBE. And if you look at Adobe, that's one that's kind of trying to show some reversal. Remember, we said the kind of some of these softwares, not all software, but tech related. Obviously, Microsoft, Salesforce, Adobe. Got to bring up the MU. Oh, man. Let's do this one first. Okay, I lied. Well, I didn't lie. Let me hold the thought on Oracle for just a second. Now, on Monday, we talked about the 5 strategic ways to look at dip buying. And we talked about number 1 being a continuation pattern. Don't think we're not going to rehit that, okay? I like to teach things where you can see a repeated pattern. I don't like to teach things that are kind of like the fly-by-night. Today's topic is on the Arun indicator, and it's just a one-day topic. I want to see topics that are used over and over and over and over again. I don't know if you've noticed. Now, if we take a look at this, classic V pattern, right? A little run to the upside, little gentle pullback. Now, if you said, James, give me that Fibonacci, I want to kind of see, did we pull back and touch the 23? Let's say it did not. Well, if we kind of measure just for some of you folks that want to see that, did we? Well, I mean, you went up, you closed there. Did we come down to that 23? Within pennies, okay? Now, what do we see on today? Now, you're going to notice that these lows coincide with highs. Now remember, we kind of talked about that. That was number one. We said that. Old resistance becoming new potential support. Now, people might say language like, oh, too high, too high. Now, you got to remember is that the earnings per share could be increasing. You never even contemplated that. All you did was just look at the price. That price is not telling you the complete story, okay? That it might be backed up by earnings per share. It might be backed up by revenue. It might be backed up by volume and so on. Now, remember when I kind of said, could the MACD stay above zero? This is what I'm talking about. The MACD stepping down, stepping down, stepping down. I'm down here, okay? Stepping down, doink, okay? And all of a sudden, that MACD does not go above zero, holds the momentum. And what does that probably actually tell us? Well, probably a good chance you actually have a higher low on the chart. Now, if we pull Micron up, and feel free to look at the Micron fundamentals. I don't have time because I've got to hit Oracle too, because I promise. We're going to right click on that chart, and let's bring this up in the Paper Money account. Third example, we're going to go back to right click, okay, buy custom, and we're going to go with OCO bracket. Now remember, James Body to Body Boyd or James Channel Boyd. And if we look at this, that measurement technique, which we kind of still have from the other day, width-wise, giving us a projected target, okay? Projected, not actual, 517. So I'm going to go ahead and just put maybe 515, okay? A little short, because we know it's an area. It's not exact. Some might rather sell a little early than try to have a target too high where it never gets there. I'm going to go data GTC. Underneath, what do we got? Well, we got a recent pullback. Did it leave a clue where those buyers came in? It sure did. Right around 4,444s. 444.82, less 2%, 435. Now that might seem really low to you, but you got to remember something as you're buying a small amount of shares. You can take a higher amount of dollar movement and it's not going to matter as much. It's not like buying up 100 shares. Now, if we went back to that same number, 4,000, okay, how many shares is it going to be? 8 shares. If we went from there, 476, to there, it's about $40. $40 on 8 shares. Answer, $320. Change data GTC. There it is. Okay. Now, this is a continuation of what we talked about Monday. Okay. And we're just trying to apply what we talked about. This was one of 5 dip buying setups. We're going to look and see, can it or could it continue? Third trade here today. MU, target, stop. If it goes to that price or less, sell. Risk is that it could sell for a lot less than or less than what the stop is. That's the risk. Let's go back now to the Oracle. Now, why are we bringing up Oracle? Now, I said this before. It's kind of sad, but it just, these are businesses, okay? I mean, it's over the last couple days, well, I should say weeks, Oracle has been lightening up on the head count, okay? Now, sometimes there might just be more contractual work. They hired people to do certain jobs. We don't know all that situation. Now, the one thing that we probably understand is that investors like a business that is really kind of watching the bottom line, right? The bottom line. And now, if we look at this, we kind of see that we had a basing pattern, and we kind of got above that by about 169. That was the first level. The second level, 183. The midsection of the channel, 191. And the third spot to the upside was 199. Now, when you go back to this for just a second, you're going to see the numbers fundamentally were not completely bad. This was not Boeing, okay? 170, 147, 226, 179. Now, you got to remember, some businesses, they're more seasonal. Some of the businesses, they might have new products or services that are coming out at different times. You could also have contracts being signed at different times that expire and they renew and so on. So it's not, this is probably not going to be something like Walmart where it looks more consistent. Okay. Now, what we're going to do with Oracle here is, now remember, this is a stock class, growth and value stocks. Okay. Now, what I'm going to do is on this chart is I'm going to right click on this chart, go buy custom with OCO bracket. Now, if I go back and take a look at this, where was the most recent consolidation area? Now, if you take a look at this, that most recent consolidation area, if I kind of just follow my pencil to the right around 174.84. So I'm going to take 174.84 less 2%. It's going to give us 171.34. 171.34, okay? Stop date GTC, dated GTC. Now remember, you could make these custom orders where you don't have to do that all the time. We talked about that in the past. Go back to the pool balls, click percent. There she is, dollar amount. Now, technically, we could go right around 4,700, but we'll keep the 4,000 in this case. 4,000 is going to be about 21.3083 shares. There she is. If we look at that and say, well, how much is that? If we buy there, we sell at that price. Now that we're making an assumption. What's the assumption? We get stopped out right at that. We talked about what that risk was. That's a risk, a forecasted risk of about $16 a share, and the portfolio has 21 shares. Now, the forecasted loss is right around 336. If we said, well, what percentage of the portfolio is that? Answer, well, 0.01 would be 1%. 0.0075 would just be 0.75%. Okay? So this is, even though we're thinking, oh, the stock is so loose, it's not overtaking how much we could risk per trade. It's not too much in terms of a percentage drawdown. Again, the assumption is we get stopped out right at 170, 134. Could it be more? Could it be at 170? Yes. That's why you position size. You're planning on maybe at not going perfectly to plan, which is probably a good way to look at it. Plan that it's not going to perfectly go to plan. Now, what I'm going to do is trade number 4, confirm and send. Now, feel free to kind of keep an eye on the estimated earnings going forward. Like we saw before, keep an eye on some companies. 2 weeks ago, we kind of were looking at a company, and when we compared the stock we were looking at to others in the group, one of the stocks that actually kind of came up was MRVL. Okay, so keep an eye on that. Do some due diligence where you say, okay, I'm looking at this stock, but are there any other stocks in the industry group that could be showing similar growth or maybe even better growth? Okay, I'm out of my time here today. Any other questions, just real quick? Now, the comment on that, going back to the Oracle, we got to go back to that and put that in there. Debbie, just keeping me in line here today. And that's perfect. Love it, Debbie. Now, if we kind of said the upper end, can't do that because we're thinking 191. That's very slim. Probably you're thinking right around 199. Now, the question I have for myself, James, sometimes when you see, if the market were to break up to the upside more, if the sector of, let's say, software were to break up, many watching that, if that broke up to the upside, might the investor consider raising that? Yeah, but it might be market dependent, of course, right? Or let's say if the volatility stays low, might they raise the target? Yes, they're watching the market conditions. So that target that we set initially is not set in stone. That's just the initial target. But the market breaks to the upside. The sector actually breaks to the upside. The industry group breaks to the upside. The investor might say, there's a better chance that I might even go higher than I thought. That's the idea. Okay? So I put that target right there, confirm and send. There she is. Okay? Now, when we also pull this back, where could we also see what's coming up next? If we go to where it says learn, we go right to where it says Schwab Coaching right there. We can now go to the place where it actually says Schwab Coaching, the live webcast and virtual workshops. We now scroll down to April 22nd and say what's on the docket for today. Next class coming up, Brent Morris, Managing an Option Portfolio. After that, trading price patterns, okay? Getting started with Thinkorswim, trading index options, and stock investing for beginners. So that's the docket for today. Let me share that with you so you can see that. Now, today we did 4 trade examples. Some of the examples we looked at, the fundamentals were a little roughed up. Those might be some of those stocks that might be returning to profitability or just improving in general. Sometimes that might be a focus of some investors, and that's why we included it here today. Now, remember, I'll be in tomorrow as well, teaching trend trading and also ETS with Kevin on Friday. Thanks to Michael Fairborn, and thanks to all of you. And also remember that with what we discussed, it was done for example, illustrative purposes only. This has been the class on growth and value stocks. So with that said, stay tuned for our next webcast coming up next. And don't forget to subscribe. Why? Because it's free, and that way you can see all of our content. We're also right on your mobile device as well. Thanks so much. Take care. Bye-bye.